Hey there, this is your February 2026 Las Vegas housing market update. And guess what? We officially shook off the holiday slowdown. If you've been wondering whether buyers and sellers are waking back up, the answer is yes. So let's break it down. First up, supply and demand. Inventory in January increased slightly month over month. We're now sitting at 8,400 total homes available, and that's up about 2% from December. Single-family homes increased just slightly to 5,987 homes. Condos and townhomes, they jumped a bit more, up nearly 7%. Months of supply increased overall. Single-family homes are at just over 4 months, and condos are sitting at almost 7 months. And that means that we're firmly in a market that's balanced but definitely buyer-leaning. Homes are also taking a little longer to sell. The average days on market is now 58 days. This is up from 47 days this time last year. Translation, buyers, you have breathing room. Sellers, as always, you need a strategy, because this is where it gets interesting. We saw just over 4,100 new listings hit the market in January. This is a 68% increase from December, and we had 1,242 new escrows added in January. That is nearly 3 times what we saw in December. Buyers are coming back. Under contract numbers jumped 47% month over month. Yes, the closings were down, but that was expected. And those were homes that went under contract during the holidays. So what we're seeing now is fresh activity building for spring. The median sales price for January on single-family homes was $474,000. For condos, $285,000. That's just a little under 2% higher overall compared to last month. The headlines are saying that homes are becoming more affordable. And they are right. The median sales price compared to last year is down about 3%. Interest rates have also come down to about 6.25% nationally, compared to closer to 7% from last January. So when you combine the lower home prices and a lower interest rate, that equals roughly $350 a month in savings, and that's a big deal. The list to sale price ratio is holding around 97.7%. That means sellers are negotiating, but homes are not being deeply discounted. And what this means for you as a buyer is you have options. You definitely have some negotiating power. The median list price jumped over 4% month over month, so you're seeing sellers raise list prices, but you can see that the median sales prices are not rising at the same pace. That gap is where opportunity lives. And if rates drift down even slightly as we head into spring and summer, we could see the competition heat up, and maybe even prices tick up as well. So if you've been waiting for proof of affordability improving, this is it. What this means for you as a seller is, first, right now as a home seller, you are working with savvy buyers, and that's how the homes are getting sold. You definitely cannot price emotionally in this market. Quick reality check, especially if you purchased after 2022. We ended 2024 with a median sales price of $480,000. And we ended 2025 at $470,000. That's about a 2% dip in overall equity year over year. So if you bought recently and need to sell, there may not be a lot of margin to play with. And this is why that conversation, how long do I plan to live in this home, is so important during your buyer strategy session. Real estate is still a long-term wealth builder, and timing does matter. Regarding interest rates, the national average is sitting around 6.25%. Projections suggest rates may come down slightly this year, but not dramatically. And if rates dip even 0.5% while the inventory tightens into spring, we could see prices tick up. So don't assume that lower rates automatically mean lower prices. They often mean more competition. My thoughts? This market feels healthy. It's not frantic, it's not frozen, it's balanced. Buyers are finally taking the leap, so shout out to you. And sellers, you're adjusting your expectations, so shout out to you too. We're entering the busy spring and summer season. I'm expecting steady activity, slight price appreciation, especially if demand continues building, and continued negotiating power will stay for prepared buyers. This is not 2021, but it's also not a crash. It's a market that rewards strategy. So let me ask you, are you planning to stay put this year, or upgrade, maybe downsize, start a portfolio and invest? Well, let's run the numbers for your situation, because real estate is hyperlocal and personal. And if you want clarity about your home's value or your buying power in today's market, reach out. I'm here to help you make educated decisions. And if you have any questions, leave them below. I read every one. Thanks so much for watching, and I'll see you next month.